Hello and welcome to Moneycontrol. You've tuned into IPO Watch and I'm your host Nikki Mirchandani. We are here to talk about Platinum Industries IPO, which is going to be hitting into the primary markets on Feb 27th. It's a 235 odd crore fresh issue with no component of an OFS to it. Well, we're here to talk more about the strategies, the financials, to know more about the companies, the unique USP of the company. And to take the discussion forward, we're being joined by Krishna Dushyant Rana, who's the chairman and the managing director of the company. And along with him, of course, is the CFO, Narendra Raval. Afternoon there, gentlemen. Let's start off with the basics. What does the company do? What does the client look like? And what's so special about your company vis-a-vis all the other offering within the listed space?
Thank you so much, Nikki, for inviting me on this platform, first of all. Talking about Platinum Industries and our product, of course, we are more focused towards a niche market. And what do I mean by niche market is we are into manufacturing of PVC additives. PVC additives are what? So in India, okay, there is a polymer called PVC, and PVC is consumed in a quantum. So I can say last year, financial year 2022, PVC was recorded at 3.2 million tons of consumption.
Okay.
And this PVC is used for manufacturing PVC pipes, cable wires, profiles, and any application that is made from PVC. So we call it that PVC industry, in their formulation, we are the heart of their formulation. And what do I mean by that? PVC additives is just 3% in their entire formulation. And that's why we call it a niche. And this 3% plays a very important role. So talking about PVC as a polymer, PVC starts degrading at 60 degrees temperature, and PVC pipes or any applications it requires almost 160 to 200 degrees of temperature to sustain it and extrude it from a machine. So if you see those long pipes, PVC pipes, long cable wires, so it passes through many temperature zones. Now the role of PVC additive is to maintain, give the product the heat stability,
okay,
give the product a better processing window, and give it a good outlook of the product. So the durability of the pipe or any other PVC application is dependent upon this PVC additive. So we call it the heart of the formulation.
Okay. So top 5 clients, talk about those. They contribute a significant portion of your revenue. We are going to be getting into the numbers in just a bit, and how do you intend to change the concentration, because that's one of the worries also that we've picked up. But apart from that, in terms of your clientele, in terms of your industry growth, what's so special about your company? Is this all the listed? So within that space, of course.
Sure. So let me give you a small background about how we started basically manufacturing these PVC additives. So in India, lot of manufacturers manufacturing PVC additives were using a conventional method of making an additive. So that is, they were using a toxic chemical called lead in their processing. So many years, PVC pipe industry or cable wires, they were dependent upon this lead based chemical for their processing parameters. Why? Because lead metal gives a very high heat stability. So it gives the sustainability up to 200 degrees. Now in 2016 we thought of starting because of the government initiative that government is emphasizing more on having a sustainable product, giving the Indian market free chemical free of product free of toxicity. So we thought that to change the scenario we should do something different. So that's how we collaborated with Dr. Michael Schiller. He is the authority in the PVC industry and the world's best scientist. He joined us in India in 2016 and we started manufacturing PVC lead free additives. So looking at the scenario in India, if I say that 3.2 million tons is the PVC is consumed, out of 3.2 million tons, 75% of the entire industry is dependent upon the pipe sector. So in India, you see the PVC pipe companies are on a phenomenal growth, right? And due to the different, Har Ghar Jal Yojana, okay, it's giving water to every villages. So the pipe consumption is huge. So this 75% of maybe I can say 2.5 million tons is consumed in the pipe sector in the country. Okay. This 2.5 million tons, out of that 10% of the PVC is consumed by the top 6 to 7 customers in the country.
That's exactly what I was asking about your top 5 customers. Could you name them?
Yes. So, Supreme Industries Limited is one of our customers. Astral Polytechnic, Prince Pipe and Fittings, Ashirwad Pipes. So these all are our top customers.
Okay. All right. So, the little that I understand, looking at your RHP also, it has a single manufacturing facility right now. The company has one at Palghar, Maharashtra, of course. Sure, you intend to utilize the funds for capex requirement, and you intend to set up more manufacturing facilities from the little that I gather. Tell us more about it. How do you intend to scale that up using these proceeds? That's one. What's your current utilization level looking at? That's 2. And which are the geographies that you think you will be able to diversify with these new manufacturing facilities?
So, currently we are on 35,000 tons of capacity, out of which lead-free additives is 20,000 tons.
Right.
And this we are expanding and investing to multifold it to 60,000 tons. So, I think the capacities that we will have in 2025, including in Egypt, and as per our RHP, we are as it's a primary raise, we will be utilizing the funds for the expansion of plant in India, as well as starting a new facility in Egypt. Right, so we will be sitting on a capacity of almost 120,000 tons per annum, which will be one of the world's largest capacity for additives. Now, looking at the geographies and the growth factor.
Sorry, when that would be by?
2025. So Egypt plant will start commercial production by February-March 2025, and India will start by January 2025.
Okay, all right.
In the last quarter of the financial year.
Okay. So what about the other parts of it? I mean, how do you intend to essentially, which is the geography more than what you've been capturing? You intend to diversify within India? What do you intend to set up? What is your current utilization level looking at? More of these questions.
So let me explain you about India, and then I will move to Egypt, and how we are shaping up our growth story. India, okay, if you see, as I explained you earlier, that India was dependent on a conventional technology, that is usage of lead. We started manufacturing in 2016 directly with lead-free additives. Now, when you talk about a transition, India is almost little bit more than $500 million market for these additives in the pipe and other sectors.
Right.
You can say that out of 100% of lead consumed in this sector, 30% has already shifted. There is still remaining 70%. So 2018 government, as per the Gazette of India, the notification was out instructing and informing the pipe sector that you'll have to stop the usage of lead in their formulations. Now this change gave us an edge that we were the only Indian company that time when the notification came that could give a good quantum of lead-free additives, because that gave us a first movers advantage in the pipe sector. Now, when you talk about the first movers advantage, normally when a company is growing and expanding, they directly start from smaller customers and then building it, going to the bigger customers. But after this notification came, this gave us an edge to entering the bigger customers first, right? And then we went on to selling to the small customers. So here, as what you said, that we are dependent on the top customers. This is the reason that we got a penetration directly to the big business houses, and then we started appointing our distributors across the India, and now we are expanding ourselves geographically in India.
Okay, I'm going to come back to you on this one in just a bit. Let's also have few questions for Narendra ji, because few of the financials need to be addressed. Profitability sir, वो थोड़ा उसके बारे में हम बात कर सकते हैं, क्योंकि 37 crore का नंबर था हमने FY23 में जो देखा था लगभग, और अब फर्स्ट 6 मंथ्स में वो नंबर हो चुका है 23 crore के आसपास. तो अगर ये नंबर हम एनालाइज करते हैं हाइपोथेटिकली, हम एक ग्रोथ देख सकते हैं 45 crore के आसपास, जो कि बॉटम लाइन परफॉर्मेंस हम देख रहे हैं. सिंपल मैथ है, कोई ये नहीं है, एनालाइज कर दिया है 6 मंथ का नंबर. और रेवेन्यू विजिबिलिटी के बारे में भी कुछ बताइए. ये जो प्लान सेटअप होने वाले हैं, ये क्या कॉस्ट पे होने वाले हैं और क्या रेवेन्यू उनसे मिलने वाली है, इसके बारे में भी ज़रा हमें बताइए.
इंडिया में जो हम प्लांट लगा रहे हैं उसका हमें इन्वेस्टमेंट है 74 crores, एंड इजिप्ट में जो प्लांट है उसका कैपेक्स है 68 crores. दैट विल हैव कैपेक्स इन्वेस्टमेंट. अनदर वी विल यूटिलाइजिंग फॉर द वर्किंग कैपिटल, and again general corpus fund. After meeting these things, this year our revenue growth is total revenue by top line is around 8 to 89 crores. Next year we are planning for 436 crores.
Top line growth आप कह रहे हैं?
Top line will be 436 crores next year.
Okay, 436 crore next year. Okay.
And after commissioning of this 25-26, it will be around 697 crores because both the plant will be commissioned.
Okay.
And as far as our bottom line is concerned, we are at par with the whatever we are planning now.
Okay.
So if you see 22-23, our bottom line was 37 crores.
Correct.
This year we have planned 46 and we are in line with the that, so we will achieve 46 crores. If you see 24-25, that will be around 53 crores. That is we are talking about PAT. That is 12% of the revenue.
Okay.
So if you see the 25-26, both the plant will be commissioned. So our bottom line will be 77 crores and top line will be 695 crores.
See, when we talk about the future projections, these are projections.
These are the
Sure,
projections.
these are the
Projections only, and we are planning to.
These are pretty much the internal projections that we are working with. I get it. And you said 25-26 is the number that we are working with as a 75 crore. Have I got that right?
Yes. So 25-26 numbers that we are working, we are in line with the current growth that we are doing for the coming year. So we cannot be a number specific in terms of, because it's something that
too late to be saying
it's too late to be saying that we will be achieving this.
And again we are expecting yes.
So when we talk about growth story,
I think the gentleman has already outlined the projections pretty much in detail for
No,
you to
already-
kind of
already-
say that
already
out.
so we talk about when we talk about future, we predict that this is where we want to reach.
Sure, these are the
Right,
internal
so,
workings and subject to fluctuation.
yes.
We get that, and we're not going to be pretty much holding. We were just wanting a roadmap of what the numbers could look like, and you've given a fair assessment. Let's talk about the utilizations. You've already suggested that. In terms of the breakup, right, where we're looking at the lead-based stabilizers at 27%, non-lead at 25%, CPVC additives at 12%, lubricants at 22%. These are the numbers that I'm picking up based on FY23 financials from the RHP. Are these numbers lower as compared to the industry standards? Because they're still in their, the 20-25 levels is what we are looking at. Is that the correct way to look at it?
So, it's a business, right? So when we talk about business, the dynamics keep changing, right? And when we see the product positioning and the product mix, so as I said that we are expanding our capacity for lead free and not for lead, right? So of course the lead free is going to be on a higher side because the transition in India is still happening. So as far as product mix is concerned, maybe we see that 50 to 60% or maybe more than that, we will be dependent upon lead-free products in the country.
Okay.
From our Indian plant.
Right. So the lead-based stabilizer utilization rates goes to what percent you said?
So lead-based won't be more than 15 to 20% of our revenue generation, because as if I tell you that 75% of the market in India is dependent upon the PVC pipe sector. All right.
Okay.
The remaining market is dependent also on 5 to 7% on cable industry, right? 5 to 6% maybe on the profile industry. Now, the regulations in the industry, okay, are based on the pipe sector, that pipe has to ban the lead, usage of lead, but the regulations are not applicable for the other applications, because over there, say for example in pipe, okay, the water comes in direct contact with the human body, but in other profiles or window profiles, it's still an outdoor application. Right, so that does not give a big harm to the human nature, unless and until that we come out with a regulation like what happened in Europe, that they phased out lead completely. India is still on its way of doing that. So for the other applications, it might take years to come for shifting from lead to lead free. So if I give you a scenario whether what product mix is going to do best, that I cannot tell you, but I can tell you that if the profile industry, the window profile industry is replacing the aluminium industry, okay, now if that starts growing, say for example more than what has been shown, then the product mix might change. So there cannot be a guarantee, but yes, we are very bullish on lead free additives.
So PVC stabilizer at 59%, CPVC additives at 8.6%, and lubricants at 27%. That's your revenue mix, correct?
That's the revenue mix, right?
Correct.
This revenue is based on the pricing of the products. Yes.
So do you intend to change that anytime soon? Where is it margin negative? More margin is coming in from PVC more, CPVC more, lubricants more. Which product is more margin negative?
So, say in terms of revenue, if I would place it, lead-free additives is priced somewhere between 150 INR to 200 INR. Okay. Lubricants is priced somewhere between 150 INR and goes up to 600 INR.
Okay.
Right. So that's the price difference in terms of two products. So say for example, if one component of PVC additive, lead-free additive, say is increased, and only 0.3% or say 0.4% of lubricant is increased, it matches up to the revenue.
Okay, but
So
now,
the product.
Right now, which one is margin negative?
So of course,
With the current
lubricants
mix and
and CPVC and lead-free additives are all contributing to a huge margin, as compared to the lead, which was a conventional product. But as I told you, the revenue generation, okay, is coming from all these three products.
Yeah, sure.
So tomorrow, if you say that which product is you're going to push more to generate more revenue,
No,
right?
I'm not asking you which product you're going to be pushing, and I'm just asking at this point of time.
Lubricant is
Margins are coming in from
lubricant
where?
is higher margin product as compared to.
So what's the margin difference between a stabilizer and a lubricant? Because that's where the mix is essentially
So
between.
stabilizer, I feel it's somewhere between 30 to 35, 37%, depending upon the product quality or the product grade that we make. And lubricants is somewhere ranging from 45 to 50% to. So that's the
So
difference.
gradually you would want to go more towards lubricants,
So,
because obviously the business common sense says you go where the margin is,
So
right?
let me put it up like this. As I told you, we are focusing on PVC as a polymer, and there are many other polymers, in the industry. So we have a heavily researched R&D center, right? And
Right.
we have all doctors and PhDs and organic chemists working in our R&D lab. Now, over here, we also wish to go into the other polymer, that is the polyolefin sector. So it can be HDP or LLDP or any other polymer. So we wish to expand our lubricant business as well for the future.
Okay, so the mix remains as is for now.
As is, yes. As of now, it
As of
remains
now,
the same.
as is.
Yes.
Okay. All right. Let's talk about your long-term agreement for raw materials, because that's one thing that we're trying to understand. Almost, the company does not have a long-term agreement for raw materials. That's also your component of your international purchases seem to be going a little higher. It's picked up from 11% in FY21 to roughly around 17% in FY23
Correct.
is what we've gathered from RHP, of course. Tell us more about it. Is that an usual industry norm that you're working with? That's one. And B, I'd want to understand what kind of margin difference or cost difference rather are we looking at from international purchases versus domestic one? Are they more cheaper in nature?
So if you're talking about the price indication, whether the import is say for example competitive or India is more competitive, so the raw materials that we require for our processing is more of an oleo based chemicals like stearic acid, which Indonesia, Malaysia makes in huge quantum. Then India also makes it. So last year, if you see the entire scenario of oleo, palm oil fluctuations, and we found that Indonesia, Malaysia were quite price sensitive and more aggressive in terms of pricing rather than the Indian companies, right? So that's why our import was more. So
Okay.
dynamics keep changing. So today, if India is price sensitive and price competitive, we will be buying from India. So this year,
history is just given us that you've been more dependent on, you're incrementally now.
yeah, because
depending
since
on
the last 2 years, Malaysia, Indonesia has been very, very aggressive in terms of the
pricing.
prices.
So how much cost benefit do you get from importing versus domestic consumption?
So import versus domestic, sometimes the if we get a right pricing, we book it for almost 1 quarter and we give them a huge quantum. So maybe like 5 to 7% difference, because we see the fluctuation. If it's going up here in India, then we book it from import and store it for 1 quarter.
Sure. Sir, आपके लिए नरेंद्र जी आपके लिए दूसरा एक question है debt. Let's talk about debt. Okay, that's one thing that we need to figure out. That's one part of the question. But let's also talk about the manufacturing facilities, which is going to be set right now. What is the kind of funds that we're looking at for each of them? That's one. And what kind of initial utilization levels are we looking at after the commissioning, as and when it takes place? Actually, when does the commissioning take place is the other question. And third will be the utilization part of it.
As far as Egypt is concerned, for capex we are investing from proceeds of the IPO, and working capital finance we will take it from the Egyptian bank.
Okay.
As far as Indian company is concerned, most of the we are putting some money in the as a working capital from the proceeds of the IPO, and some of the inter-accounts we will match up with the things. If it is required, we will go for the working capital finance from the financial institution. As of now, we are debt-free company, but we will try to maybe a debt-free company only.
So the plan is to remain debt-free.
The plan is to remain debt-free. Yeah.
Okay.
Looking to the profitability of our company and internal accruals, if we see whatever working capital requires, maybe it will match or it will fetch to our water requirements.
So what is the working capital requirement per year for the company?
That is now our data cycle is around 60-65 days, and credit is around 35 days.
Okay.
We keep the inventory around 37-38 days.
Okay.
So our capital requirement is around 35 to 40 crores working capital. That already we match with our
65 to 70 days working capital cycle.
Okay. Okay.
So that is in line with our industries, and we are very comfortable with the working capital cycles and whatever we have.
And the new plant utilization rate, when will this new plant be commissioned? That is one. And what kind of utilization rate will be scalable, say 6 months down the line of it being commissioned?
See, India, it will be commissioned by the January 25.
Okay.
And I think within 6 months we will be reaching 50-55% of the capacity.
By June?
Yeah.
June 2025.
Yeah.
Okay. And the other plant?
Other plant, Egypt also, it will take another 6 to 8 months. It will be commissioned by the March 25. Another 3 to 4 months it will take to fetch up the market. Because Egypt, what we have got the benefit, Egypt there is no local manufacturer stabilizer. So that immediately we will get the benefit of that, because nowadays Egypt is importing from the Turkey and all these other countries. And already Egypt is have a shortage of the dollar. So that benefit we will get it. And again we will got the government support from Egyptian. So that is a repartition available. Whatever capex we are investing, we will get it back through tax benefits and all these.
What kind of benefits are we
Tax
looking
benefits.
at from the government in that case?
If I can
Yes,
answer
please.
this, so Egypt first is it has a bilateral trade agreement with India, right? So any investment that you do in Egypt, it has a it subsidizes in form of corporate taxation. That's the first benefit that we have. Secondly, the biggest point of being in Egypt is that we are closer to the world markets, right? It's the center of the world, and if you talk about Egypt, Egypt is heavily dependent on imports. So 95% of Egyptian commodities or Egyptian products that they consume is imported. So once we set up a plant over there, we will be the only plant manufacturing these additives.
Oh,
so
lovely.
it will give us an edge, but we are still in special economic zone. We will be exporting 60 to 70% to outside from Egypt, and 30 to 40% on an average will be sold to the domestic market. So that's the edge we have with Egypt.
So what sort of incentives are we looking at and support are we looking at from the government to this in terms of financials?
So there are no such incentives, apart from having a benefit of the corporate tax. Right, and that's the only benefit. Otherwise, there are no such incentives.
Okay, all right. Since I wanted to also revenue visibility from both these plants, India versus what we see in Egypt, what will be the sense of % of revenue contribution, say in the first months, June 25 for Indian plan and for Egypt plan? What kind of revenues as a % to your top line can we look at once these
Egypt is going to contribute almost 30% in the year 27-28 to our revenue. So
and it's going to be commissioned by
commission by 2025.
And 27-28, it will reach a 30% contribution to your top
yes,
line.
because first 2 years, of course, will be a challenging times to set up the market, to commission the sale, to have a right sale. So we will be working on that. So first year, I don't see a major contribution like 5 to 10% maybe, because when first year we will go there, we will of course be catering to the domestic market.
And the Indian plant?
Indian plant will, if it's 30% Egyptian, 70% will be from India.
Okay, all right. Addition, incremental of your total overall revenue is what I was asking as a percent to your revenue, correct?
So when you're talking about percentage, how much growth the company
That's
will
exactly
do,
what I was asking. I was not asking in terms of the mix. I was asking in terms of the incremental growth revenue
the
visibility.
Incremental growth revenue, we are seeing that last year, in fact 22, we have achieved a top line of 232 crores.
Yeah,
And
in
the next, say for example, we will be growing at almost 25 to 30% CAGR year on year, and in 2027-28 is what we are saying that Egyptian plant. Like for example, we have shown somewhere around 27-28 figures to be around 1400 to 1600 crores, where 30% will be the revenue contribution from the Egypt plant.
Okay, fair point. A bit of concern, like we have already mentioned, is in the hands of top 5 clients, which contribute to roughly 82% of your top line growth as of first 6 months. Correct me here if I'm wrong. That's the data I'm picking up from.
It's not 82%. It's somewhere around. I think you must have referred to the figures 21, 22.
Okay.
But the dynamics keep changing as we are expanding our
So
customer base.
what's the figure right now for the
right
first
now
6
it's somewhere
months?
around 60 to 65%.
70%.
Okay.
70%.
And you intend to diversify that further by bringing in more clients?
Of course.
Apparently?
So that's our plan, and that's where the capacities are building up, and
So this should go down by what percent, say by FY25? In that case, what's internal projections, or maybe just the internal targets that you've set might not be achievable, but just a broad roadmap would be able to help?
So it's very difficult to give you a specific roadmap,
Sure.
but looking forward, of course, this percentage needs to go down by increasing the sales, not by decreasing the sales, but increasing the sales to other customers.
Right.
And that's where we have appointed distributors everywhere in India to get our penetration faster. Now, as I said that the growth happens, but the growth in the PVC industry is happening at 8 to 10% year on year. Now this 8 to 10% means the top 5-6 customers are growing faster because of the mass production. So they will grow faster, so that percentage, right, will take some time to decrease.
Okay, what I want to ask you is a very broad wrapping up question perhaps. A, I want to understand in the next 3 years, what is the growth that you expect the industry to clock in? And B, do you think you'd be able to outperform that growth in the coming 3 years?
So, if you talk about industry, okay, we are geared up to bring in a big change in the industry. How is India is expanding its capacities on PVC. India is expanding its capacity on CPVC manufacturing. Okay. So now you see Make Money Industries has come up with a CPVC resin CPVC plastic production in India. You see DCW expanding its capacity. Aditya Birla Group tied up with Lubrizol, and they are coming up with a huge capacity, and there are companies in line. So India is adding up to a massive capacity. Now how do we see the growth in this addition of the capacities is we are a diversified we have a diversified product portfolio, right? So tomorrow if PVC is growing, we are growing. Tomorrow if CPVC is growing, we are growing. So we have two polymers to depend upon, and as I also explained you that we are heavily researching on other polyolefins, so the entire polyolefin sector we grow. So we are working on a diversified plan, so we have a very good edge in terms of growth prospects that we are showing to all our investors.
So outperform the industry.
We wish to.
Any numbers that you'd want to throw in?
As of now, there are no numbers. But yes,
I think I should rather navigate my conversation towards Narendra ji, because he will give me better visibility on numbers. So industry growth at what level versus company growth at what level? I think I'll pose that question to Narendra ji now.
I think already is explained.
So numbers, numbers are, I feel that I don't want to fix upon the numbers. Reason is sometimes these numbers fix your mind. Say if I fix 100 crores, I will not fix. I want to outperform. Maybe I don't want to fix this 100 crores. I want to go to 150 crores in that short span that I want to achieve. Is what I'm trying to say. Is so numbers are,
Numbers is all that we care about, to be honest. But I think we're just going to leave it at that. And thank you, gentlemen, for taking all the time and having this conversation. With this, it's a wrap. The IPO, of course, opens up for subscription tomorrow. So please read in the RHP and take an informed decision. But with this, it's a wrap. Thank you so much for tuning in.